friends, and welcome on this Sunday early morning, we can say, because it's not 10 yet, and you all join. We are very grateful to you all. We are thankful to see a Charanjot Singh Nanda sir, everyone's favorite, we can say. Thank you, sir. Thank you so much, sir, for accepting our invitation once again and be here with all the attendees. We are very grateful to you, sir. We can see you are traveling and still you are ready to address attendees, sir. It's our pleasure, sir. We also welcome our first speaker and a fantastic dynamic, we can say a GST expert, say Abhay Desai, sir. We welcome Abhay, sir, and thank you once again, sir, for addressing from our platform, sir. Thank you. We also welcome Shubham Khanna, sir, from Delhi, our technology partner from Webtel. Thank you, sir, for joining with us. We are very thankful to you, sir. So friends, would like to inform you about that Connect Easy. We have done many physical session at webinar on Excel, on practicing professional before the lockdown in our office. In the lockdown period, last April, we have started with the webinar, and we have completed. It's proud to inform you all that we have completed more than 700 plus webinar in this series, and almost we have one webinar on a daily basis, and sometimes even more. Even last year we have done 3 to 4 sessions in a day as well, as people are finding a very useful and knowledgeable, so they are attending as well. So thank you for all the love and support throughout the year. We have done one fantastic series and very inspirational and motivational, and in that we got support from our leaders from our region, from our central. Even Nanda sir has addressed that. We have done talk show with physically challenged chartered accountant. We have done 21 episodes almost on every Sunday at 11 o'clock. 11 to 12 we have a format that in that we have discussed their stories, their life stories, and try to motivate all others in this pandemic time. So it's very memorable and very satisfying experience for us as well. That 21 episode, you all that can check on our YouTube channel at Connect Easy. You can subscribe there and press bell icon as well. You will get the notification of all our future program, and many other topics. We have not untouched any such topic in 700 session. You can understand not only on GST or income tax on kind of. We have done fantastic series on different aspect. Recently on Monday, we have started with we have completed that series on Friday, which is on entirely on startup. We have covered each and every aspect of startup, including valuation, taxation, registration, IPR. That series we got to have a inaugurated by Nanda sir. So it's our pleasure, sir, again that you have inaugurated that. Apart from that, we have done under the chairmanship of Charanjot Singh Nanda sir, CA Kavi Sammelan recently. In that, CA Dr. Justice Vinit Kothari sir has also graced that occasion. We have done that 15 days back, around 2 Sundays back. So different kind of this type of program we have done, and it's a great community support we are getting from finance professional, and for that we all are very thankful to you. And now, without taking much of your time, would like to invite first Shubham Khanna ji, our technology partner from Webtel, for today's session. Sir will tell about Webtel, and after that would request Shubham ji to introduce our today's keynote speaker, Nanda sir, as well. So over to you, Shubham bhai.
Thank you, sir. Can you just firstly confirm me if my screen is visible?
Yes, the screen is visible, sir. You can go ahead, sir.
Right. So on the onset of this event, first of all, I would like to thank Connect Easy and CA Virat Shah ji from Mumbai, and our successful collaboration with Connect Easy for this event and the upcoming series. Virat will be announcing the upcoming series later in this webinar. To begin with, I would like to introduce our organization, Webtel. We are a 2-decade-old compliance company, India's leading e-compliance company, and we were the first one in TDS and XBRL compliances. We have participated in every e-compliance initiative of Government of India and has launched products for the benefits of professionals and corporates. We are in partnership with departments like NSDL, Income Tax Department, GST, and MC. Here is a small look of journey of Webtel, which is of 25 years. We incorporated in the year 2000, and then with every year passing by, we launched many products for the benefit of professionals and corporates to make this digital revolution in compliances which were earlier filed through paper to now 100% digital. Here's a small look at the buffet of our products, starting from compliance solution like TDS, tax, GST, Goldmine, to professional benefit products like Virtual Office, which is a website for professionals, WebEdge, office management tool for chartered accountants, work at home tool for pandemic called VA, to industrial and corporate solutions for payroll, integrated solution for GST, WebEsign, digital signature, and also our contribution in the education industry with Webtel Academy. This session, we are going to talk about the latest amendments and changes relating to GST. So I'll just add on to our GST part. We are a complete solution company, an ASP and GSP, a single-stop solution for all your GST needs. We have integrated solution for GST return filing, be it annual return, monthly return, audits, and integrated solution for seamless generation of invoice and e-way bill. With all the security to handle your important data. Now, going ahead, I would like to introduce a very soft-spoken and a very eminent personality on behalf of Webtel and Connect Easy, CA Charanjot Singh Nanda ji, who is also one of my mentors when it comes to public speaking. He is a very loving speaker and needs no introduction. So I'll just add a couple of points. The designation that he is holding currently, he is a Central Council member of ICAI, and he is currently the Vice Chairman of Banking, Finance Services and Insurance Committee, and also the Chairman of Internal Audit Standards Board of ICAI. Sir has deliberated in thousands and thousands of seminars and webinars, and it is our fortune and we are glad to have him on our platform. Over to you, Nanda ji, to present a few points regarding today's topic, which relates to GST and the latest amendments and the expectations from the 44th and upcoming GST Council meeting. I hope they are audible to all of us. Over to you, sir.
Yeah. Thank you, Shubhamji, for a very generous introduction. Thank you, Viragji, for calling me. I'm glad to be here with Mr. Abhay Desai, my very old friend. Good morning, ladies and gentlemen. It is always a privilege to come and speak to you, particularly on a Sunday morning. I'm traveling from Delhi to Chandigarh. So I'm in the car. I thought that I should speak to you while traveling only. Ladies and gentlemen, the topic to be deliberated today is recent amendments in GST law. I will not touch that. I have a point which I want to make to my practicing community. Ladies and gentlemen, we chartered accountants work so hard. But when it comes to practice enhancement, we normally do not find strategies to do so. I remember when GST came, I am not only a faculty of GST in India, but I am a faculty for Middle East also. So those days, I speak even now in all GST training programs organized by the GST Indirect Tax Committee. I'm a speaker there. So I have noticed that there are so many people who attend very meticulously the GST training programs. Yet when it comes to practice, they are effectively not able to translate that knowledge into practice. I'm reminded of a couplet before I start. The couplet largely speaks about your courage. The couplet is मुझ में और मेरी किस्मत में हमेशा यही जंग, मुझ में और मेरी किस्मत में हमेशा यही जंग, मैं उसके फैसलों से तंग, वो मेरे हौसलों से दंग. The English version is that I am in constant conflict with my luck. I am always disturbed by the decisions of luck, and the luck is always astonished by my courage. Ladies and gentlemen, we chartered accountants need to understand the basic impetus on which we need to grow our practices and resonate it to the world at large. We have been doing GST work as is done by practically every CA firm, may it be small or large firm. But I have an issue. All of us focus normally on compliances. My dear friends, I would list down 6 areas of GST which are untouched by so many people, and there is a lot of work. The first area is entry profiteering, which we precisely call as undue enrichment. I would like to just put it for chronological basis that Australia is a very small country and there are close to 10 lakh pending investigations of entry profiteering. Let us very candidly go inside and introspect how many of us have drafted the deeds for entry profiteering. People who are doing GST
I think there is some audio issue.
Nanda ji, your
Sir, we
voice
are
is
not
not.
able to listen.
time bound. My voice is not is fine. I'm sorry if my voice is
Yeah,
not
now,
audible.
now,
I
now it's
Now
good.
it's okay.
I'm traveling, so maybe there are some issues. So I told you that advanced ruling, when we were students, we used to listen about advanced ruling, but we could never see that on table. Now with GST law, within 90 days, any issue which the client has, although it cannot be used as a matter of reference for further litigations, because it is only beneficial to the person who has obtained the advanced ruling, but still it gives a mind and direction of the GST law as interpreted by the department. The third area, inverted duty structure refunds. I see so many people who are doing this, and those people who are doing it are at the top level. I know a 2016 chartered accountant firm in Ludhiana doing it, and they have crossed all limits of expansion. They are at the top gear. Inverted duty structure refunds, the law related to it, what are the areas where refund has to be obtained, what are the basic connotations. These things are not done by normal CA firms. Why not? The fourth area, credit notes. Abhay would decide with me. I had a talk also with him regarding credit notes. Please understand, credit notes of pre-GST era also needs to be evaluated and seen what the treatment has to be made. And otherwise, people do not do any consulting on credit notes. And if you go to any corporate, they want specific firms, specific practice outlets who could advise them on credit notes. See, big telecom companies, big infrastructure companies, big banks, they don't have such infrastructure. So once the GST has to be claimed by way of credit note, how it has to be done is not clear. The fifth very important area, reconciliation of 2A with ledger dump. How many of us do that? I can tell you one thing, I live in Delhi. If you pass by Gurgaon and you ring any company, they are still in lookout for people who lookout for professionals who could do that for them. Now we come on writing opinions. Abhay has been sending so many mails lately, and I've always seen the quality of drafting which he makes. But how many of us write opinions for corporates? In big cities, there are so many opinions, and this is a great opportunity for people who know the law very well and who have got good technical and writing drafting skills. They can always add value to it. How many of us do this? If you look at the bouquet of services which GST demands, we are largely stuck only at the level where we do compliances. I move ahead. How many of us now tuned to litigation? Notices have started coming. How many of you know there is one decision of ethical standard board that any practicing chartered accountant can do training courses on GST. I'm sorry, there may be some voice problem also because the patch is very rough. How many of us do training programs for normal clients? And the best part which we have decided in ethical standard board is that I have a separate firm and Abhay Desai have separate firms. Both of us can do the training program and share the fees which is allowed under the code of ethics. If you go into GST, you please understand one thing, that for the practice to be on the highest ebb, there is a couplet which says, जरा से पाने की चाहत में बहुत कुछ छूट जाता है, जरा सा पाने की चाहत में बहुत कुछ छूट जाता है, नदी का साथ देता हूँ समुद्र रूठ जाता है. You get involved. I'll give the English version, which means that in order to have a small benefit, I lose a greater benefit. If I support the sea, I see that if I support the river, the sea becomes rude to me. This is life. We don't create systems, we don't create infrastructures to further our practice, and furtherance of practice is something that will ultimately ensure that all our goals are put in the right perspective. This pandemic has thrown us out of gear. And all of you know that the Institute of Chartered Accountants of India was set up by an act of parliament way back on 1st July 1949, when the most important document to the democracy, the constitution, was not adopted. All of you know that the constitution to this country was promulgated on 26 January 1950. The pertinent question that arises is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India when its own democratic setup was not in place? The answer is very candid. They were looking for a disciplined band of soldiers to steer this country out of confusion. Do you feel we are able to do so? I don't think so. Our practices are not moving to the level at which we feel they should be moving. We are not living, understanding the life of a chartered accountant. We are a class apart, and we normally forget that. Please appreciate. We forget that we are a class apart. Our practices have to be so redesigned. And after the pandemic, I've seen so many firms who are feeling that the work is going out, no luxury services, but necessities also we can frame in a different manner. So my keynote today would be to address practices need to be reorganized. Practices need, see, if at 9:45 in the morning people have thronged in such large numbers, shows that they are very keen to perform. They are very keen to work hard in their life. Yet a small phenomenal mishap, a small, you can call a negligence of not creating a structured environment of practice, makes us on a back seat. There is a saying in English which says people never plan to fail. They generally fail to plan. Planning at our level is not done. So ladies and gentlemen, I would request you on a Sunday morning that today evening, take a pen and pencil and create a blueprint for yourself and your practice outfit. What you want, what are the areas where you want to focus, from where you want the revenue to come out. Because once the revenue inflow is clearly structured, at that time you will not have tensions and you will enjoy your life also. We need to understand one thing, that our focus will ensure that we have the best results flowing in. मंजिल मिल ही जाएगी थोड़ा भटक कर ही सही, मंजिल मिल ही जाएगी थोड़ा भटक कर ही सही, गुमराह तो वो हैं जो घरों से निकले ही नहीं. People who have come at 9:45 in such large numbers are people who are thoroughly motivated. They need to simply tingle their professional aptitudes and perform. The English version of this couplet is that you will ultimately have the destination. Nobody can stop you. Those people who are not come out of the house, they may be the biggest losers. So people who have thronged in larger numbers need to set up their practices. And I can say only one thing, that I am always available. Any one of you want to speak to me, you can take my number. It is there at ICAI.org. My mail ID is there. You can write a message to me. You can speak to me. I have totally dedicated my life to ensure that we professionals have the best impetus in terms of professional knowledge and in terms of professional work. And I resonate this in all conferences. I speak at least on 2-3 conferences every day. And I make it a point to put before chartered accountants that time has come when we have to sit down, relax, and create an infrastructure for us in terms of the practice area where we want to go. GST essentially is a very good practice area, but we have to leave the work of compliance to our junior staff and move on to newer areas, may it be litigation, may it be anti-profiteering, advanced ruling, may it be refund processes, may it be credit notes, or writing opinions. It's a great area, and I welcome you all to join so early in the morning. I compliment Webtel and compliment Virag Bhai, managing partner of Connect, to have established such a good program. And I want to again put one thing, that the faculties which have been invited for today's session are fantabulous faculties who have got deep insight into the entire GST arena. So I want to thank you all for giving me patient hearing. I am always there. Thank you. Thank you so much.
Thank you so much, Nanda ji, for your kind words. I think your words have motivated each and every participant who have joined us, and I think all those who might be in a bit of this sleep, they would have woke up and motivated to listen this session. And with that, it's a very, very, very strong base setup to start the conference. And sir, again, sir, we are very glad to have you on our platform. Thank you so much for accepting our invitation, sir. Thank you so much.
Thank you so much. Thank you so much. I'm always there. Thank you so much.
Over to Viraj ji to introduce our speakers of the day, so that we can begin with the technical session.
Sure. So thank you, Subham bhai. Thank you so much, Nanda sir. Once again, we are very grateful to you, sir, and you are everyone's favorite, sir. Thank you once again, sir. So now I would like to introduce our today's first speaker, CA Abhay Desai, sir. I think all GST lover or GST practitioners are very well known about Abhay Desai, sir. Sir is a well known in entire country. Sir is a all India rank holder at CA examination. Sir has done LLB as well as DISA qualified also. Sir is partner with Yagnesh Desai and Company. Sir has authored a book on Sabka Vishwas Dispute Resolution Scheme as published by a Chamber of Tax Consultant Mumbai. Sir is one of the author at ICAI publication on Guide to GST Audit and Annual Return. Sir has authored a book on Get Ready for GST. Sir is co-opted member at Indirect Tax Committee of ICAI. Sir has handled consultant advisory litigation up to the Supreme Court of India. Member of GST group formed by ICAI to make recommendation to state and central government. Sir has addressed more than 500 plus seminar on indirect taxes till date and many webinar as well. Sir has made representation before the Finance Minister of India as well as Deputy Finance Minister of India on various issues under GST. Sir has recently presented a paper at prestigious RRC organized by Bombay Chartered Accountants Society, which is very well acknowledged by many members of the RRC. I myself, as a committee member of that organization, that event as well. So I can assure that I can acknowledge that one of the best paper presentation, sir. Sir has also presented paper at various other forum as well across the many cities in India. Sir has published more than 300 plus articles and regular article in GST Law, Times by Sentex, Taxman, Tax Guru, VST General, GST General of Bar Association, board member of an NGO based in New Delhi. Sir is advisor to Fortune 500 companies as well as large number of listed entities in the field of indirect taxes. Sir is a winner of all Gujarat elocution competition held by Bar Association. Awarded as best column writer by the Gujarat State Tax Bar Association, brain trustee in All Gujarat seminar by Bar Association. Sir, is treated as recovery and attachment proceeding under GWAT law, has been published in International Research Journal of Management and Commerce, published by Associate Asia Research Foundation. So, with this introduction, we welcome you, sir. And our today's other speaker also, we have Kashish Gupta ji from managing partner at Puck Regal, who is the we can say a course structure, or who has made this design for our today's webinar, and also that upcoming series which we are launching from 5th July, that is also entirely structured by Kashish Gupta ji. We can say a course director. We are launching, this is a fourth series with Kashish bhai. So with this, we also welcome our other speaker when they will join. See Archana Jain ma'am and Rajeev Khandelwal sir, director of Webtel. We welcome them as and when they arrive. So with this, we first would like to request see Abhay Desai sir to take the proceeding ahead of our today's session, sir.
Very warm good morning to all of you.
Sir.
Okay, okay. I think screen is not required as such, so maybe I can just talk.
Okay, sir. Okay, okay. Sir, I have stopped the screen. You can continue.
Okay, okay, okay. So very warm good morning. It's a fantastic Sunday morning, and I'm indeed thankful to first and foremost Virag Bhai for giving me this kind opportunity. To Kashish Bhai, the course session director. He has wonderfully structured the program. Special thanks to Nanda sir. It has always been a pleasure to discuss issues with him, and he has always been there as our leader in the Central Council to take up our cause and see to it that it meets the objective. I totally agree with his views that we need to come out from compliance practice. In fact, as you can see in today's session also, and Webtel is going to demonstrate that a lot of work that currently probably a lot of chartered accountants are doing would be soon taken over by the machines. Machines are much more capable in doing that work. They are more accurate. They can work 24/7. They can give instant results. So certainly any client, any industry would prefer machine to handle their compliances than a human being, given the fact that the level of accuracy and the cost would of course be in their favor. So time is not far. In fact, when we constantly interact with the officials at the finance ministry, today if you compare our compliances in indirect taxes, we are at stage 3, which is a stage where the transaction level reporting is required. Soon we'll be at a stage 5 where not only the transaction level reporting, but even the audits and the assessments by the department would be done in an electronic manner. So the physical interaction, the physical submissions would totally be ruled out from the system. And once that starts happening, I believe that a lot of compliance work will end. A lot of value-added work will be required in terms of drafting opinions, handling litigations, handling the notices. And that is where the knowledge of law will be of utmost help. Now coming to today's session, mainly two topics have been allotted to me. First deals with the refund related aspects, and the second deals with the MRO related aspects in the context of shipping industry. We'll certainly cover both the topics at length. Half an hour has been allotted to me, so I'll try and complete both the topics within the allotted time. So first, let us discuss on the refund related changes to give a background of the change that has happened in terms of computing the period of limitation where the deficiency memo is issued. We need to understand a little bit background about the provisions of law. As you are all aware, Section 54 of the CGST Act is the parent provision which deals with the refund related situations. 54(1) provides that a registered person who intends to claim the refund needs to make an application for the claim within a period of 2 years from the relevant date. Then explanation to Section 54 talks us about the relevant date in various situations. Section 54(1) also says that the refund needs to be applied in the form and the manner prescribed. So the manner and the form of making the claim is delegated to the rules. So that is where Rule 89 comes into picture, where it says that the refund application is to be made in a form electronically, which is known as RFD01. Then Rule 89.2 talks about the documents that one needs to append with that particular form in electronic mode with the application. Then Rule 89.3 talks about certain other procedural matters. Rule 89.4 talks about the computation of the maximum eligible refund amount in case where the refund is claimed of accumulated credit on account of zero rated supplies. Rule 89.4A, 4B are specific refund related provisions in the context where certain benefits have been claimed under the specified notifications. Example, if someone has made the imports under advance authorization and he has claimed the exemption, but there are certain other inputs or the services which he would have used in making the corresponding exports. So a refund of those taxes can also be claimed under 89 subrule 4B. Similarly, 4A talks about cases where a person makes procurements under as a merchant exporter and subsequently exports the goods. In that context, whatever tax has been charged at the concessional rate, that can be sought as a refund. Rule 90, which is where the amendment comes into picture, talks about the acknowledgement. Once the refund application has been filed by the taxpayer, an acknowledgement has to be granted by the department. The form is RFD02. Now, the practical problem that used to happen is that the Rule 90 before the amendment used to say that if the refund application has been filed and if there is a deficiency which has been noticed by the officer, then he can issue a deficiency memo. There is a form which has been prescribed for that, which is known as RFD03. So once he issues the deficiency memo, then the rule says that one has to file a fresh refund application. Circular came to be issued in the context of this provision, where the circular, reference number of circular is 125, where it talks about how do you understand this particular requirement of issuance of deficiency memo and filing of the fresh claim and the consequential aspects of this particular rule. So circular deals with that aspect from para 9 to 12, where it says that once the deficiency memo is issued, the amount for which you had claimed the refund will be automatically recredited back into your respective ledgers. You need to file the fresh application. Circular goes one step ahead, and circular says, which is not there in the rule, it says that when you file the fresh refund application after curing the deficiency, that fresh application will be treated as a new application, and therefore the time limit given under subsection 1 of section 54, which says that refund application needs to be filed within 2 years from the relevant date. So that will apply in the context of the fresh filing date and not in the context of the original filing date. And therefore the rectified application, which the circular treats it as a fresh application, also needs to be filed within this outer limit of 2 years. So if happens, let us take a case where you file the original refund application within the period of 2 years granted under law. Deficiency memo is issued by the department. You rectify the deficiencies and you make another application. But by the time when you make the another application, it might happen that the period of 2 years might have lapsed. And therefore the circular says that in that situation, that refund application will be treated as time barred. And on that basis itself, that refund application would be rejected by the department. So that is how the rule and the circular states. Certainly, this was not never intended, because when a person files an original application within a period of 2 years, he is conscious that he wants to claim the refund. He is in fact approaching the authorities by way of filing the refund claim. But because of some defect or other, that application is not completely in line with what the rule suggests, and therefore the officer says that I'm issuing a deficiency memo. You make a fresh claim rectifying those deficiencies, and therefore that should ideally be considered as a continuation of the original claim. It should never have been treated as a fresh claim. But since the rule mandated that a fresh refund application is to be filed, the circular went ahead and clarified that the 2 years time limit would be considered in the by the context of the second filing date and not in the context of the original filing date. So that was a controversy. A lot of processes have faced this situation where the refund claims have been rejected merely because when they filed subsequent to the issuance of deficiency memo, the time limit of 2 years would have elapsed, and therefore the department rejects their claim. Now, what is the amendment? Now, the amendment says, which has been brought through notification 15/2021, which is dated 18th May 2021. It's a prospective amendment. It's not a retrospective amendment from the apparent reading of that provision. We'll come to the issues in a short time. That amendment says that it inserts a proviso in sub-rule 3 to rule 90, which deals with the aspect of issuance of acknowledgement. And what the amendment effectively says is that the time limit between the date of filing and the date of issuance of deficiency memo shall be excluded for the purpose of calculating the period of 2 years for the relevant date. So in a nutshell, what the amendment is trying to tell us is that I'll file the refund application today. Let us say after 10 days I get a deficiency memo which says that these are the defects. So you are advised to make a fresh claim. You are advised to file another claim curing the defect. So that 10 days that have passed between the date of filing, that is today, and the date of issuance of deficiency memo, which effectively sets aside my original application and asks me to file another application. So that 10 days period should be excluded. And therefore, let us say today is the last day for me to file the refund claim. Let us say today is the end of the second year within which I was supposed to file the refund claim. I filed the original claim today at the last day. I get a deficiency memo 10 days later. And after that, if I cure the defect and file the fresh application, as per the circular, it is time barred. And therefore, the department used to reject it. And now with the amendment, what will happen is that the 10-day period would be excluded for the calculation of the limitation period, and therefore I will get one additional day, because since I filed it on the last day, and from that day till the date of deficiency memo, that time frame has to be excluded for the purpose of calculating the limitation period, and therefore I will get 1 day effectively after I receive the deficiency memo to file another application. And if I do that, then as per the amendment, that second application would also be considered to have been filed within the period of 2 years, and therefore it would not be rejected on the basis of limitation. So this in a nutshell is the amendment. Now let us see where the department has gone wrong in terms of making this amendment. If you see the entire structure of Rule 90, which deals with acknowledgement, in context of which this amendment has been made, one thing that probably has been missed by everyone is the fact that what is the purpose of this Rule 90? Now, if you see Rule 90, what it says, that it talks about issuing the acknowledgement after the refund application is filed. But that issuance of acknowledgement is for what purpose? That must be seen, because only in that context one has to read the law. If you see Rule 90, it essentially says that the purpose for which the acknowledgement is issued post the date of filing of the refund claim is for computing the time limit for the officer to pass the refund order under section 54(7). Section 54(7) gives 60 days time limit from the date of filing for the proper officer to pass the refund order, either accepting the refund claim fully or partially, or rejecting the refund claim, whatsoever as the case may be, in form RFD 06. So essentially Rule 90 talks about issuing the acknowledgement in the context of ascertaining the 60 days time limit which is available for that officer to pass the refund order. So with that limited purpose, the Rule 90 has been created only from the point of view of giving the officer additional time in terms of calculating the limit, not from the date of filing but from the date of acknowledgement, to ensure that he gets that 60 days complete window to process that claim and pass the appropriate order. So it is in that context that Rule 90 has been issued. Rule 90 has never been issued, has never been created in the context of calculating or computing the limitation period under section 54(1). So in my humble view, first and foremost, this amendment in fact was not required at all, because for the purpose of calculating the period of 2 years from the relevant date, I am still guided by section 54(1). And my original application, since it was within the time frame of 2 years, the rectified application cannot be considered to be the fresh refund application for the purpose of calculating the time limitations under section 54(1), and therefore I would say that even in absence of this amendment, a view can be taken that Rule 90 limits itself only for the purpose of calculating the time limit under section 54(7), that is for the officer to pass the order. It nowhere applies in the case of 54(1), wherein it is from that point of view of taxpayer that one needs to see whether he has made the claim within a period of 2 years or not. And therefore, I believe the entire amendment that has come is on the wrong presumption that the acknowledgement issued under 90, under Rule 90, will also be considered for section 54(1). I believe that is not so. The express language of Rule 90 does not deal with the computation under section 54(1). It only deals with the computation under section 54(7), and therefore on that basis itself one can say that this amendment anyway has come, but it was at first instance not required. My original application always has to be seen as the date of filing for purpose of calculating the time, the limitation of 2 years. That is number one. Number two, in the past also, this is not the new law in the context of refund. This similar provisions did exist even in the earlier laws, and in the earlier laws you will find there are plethora of judgments where the tribunals have consistently taken a view that even filing the refund application by giving a letter, not even using the proper form which has been prescribed in the law, that itself is sufficient for it to be treated as the date of filing, and accordingly the time limit which was in the earlier law under section 11B of 1 year needs to be applied. One may refer to the decision of Goodyear India, that is a Delhi Tribunal decision 150 ELT 331. There is a Kolkata Tribunal decision in case of Bandiguri Tea Estate 134 ELT 116. There is a Rubberwood India decision of Bangalore bench in the 206 ELT 536. Consistently in all these decisions, the state principle has been applied. Now, why that has been applied? One has to appreciate that this 2 years time limitation has been brought for what purpose? The purpose is that if someone wants to make a claim and wants something from the government, he needs to go to the government and tell them within the time limit that this is what I need. With that objective, time limitations have been framed in the law as far as the refunds are concerned. So what the tribunals have held, that once someone has indicated his intention to claim the refund, although that intention could have some defect in terms of he may not have attached certain enclosures, he may not have given some additional information which otherwise procedurally he was supposed to give, but that would not mean that he did not intimate the intention of claiming the refund. He in fact did intimate it, and because of some procedural defect he was made to refile or made to rectify the application and submit the same again. That would not mean that the second submission is the original date of filing. The original date of filing continues to be the first application date, and therefore I believe those principles still will equally apply in GST, and on that basis also certainly one can contend that this amendment is merely clarifying the position which was already existing in law, and therefore it has to be read as a procedural clarificatory amendment. It should apply to not only all the pending refund claims, not only the claims made after 18th May, that is the effective date from which this notification has been published, but it should equally apply to all the claims which have been filed right from July 17 onwards, where for this reason the claims have been rejected or refund applications have been rejected. But of course you must be in appeal then in that case, because the rejection orders must have been challenged, and at whatever stage they are, mostly they will be pending at the commissioner appeal level because tribunal is yet to be constituted. So in that context, at the appellate level, you can certainly rely on this amendment as a clarificatory amendment and put forth the view that in that context also it should apply even to those claims, and accordingly the refund ought to have been allowed. One or two aspects on this, and I go further. One has to appreciate one more principle which has been laid down by Supreme Court in the case of Vatika Township, where the Supreme Court said that whenever some procedural amendment is made which is not to the detriment of other taxpayers and which is clearly visible that that was to ease a certain pain or faced by the taxpayer, those procedural amendments have to be interpreted retrospectively. This particular amendment fits clearly into that category because this amendment is not detriment to any other taxpayers who might have made the claims within the time limit. It does not act as a detriment to their claims. It in fact furthers the objective of those taxpayers who made the claim within time, but because of some procedural defect were asked to refile the claim. And therefore, I would submit that that ratio of that decision can also be applied here, and it can be contended that given on that basis, this amendment needs to be seen as applying from July 2017 itself. One last aspect, if you see the entire philosophy behind this particular rule, where they say that you have to, the officer has to issue a deficiency memo and then the taxpayer has to file the claim again, that has more to do with the limitations of the system. Because the GSTN system has been structured in a particular manner which says that once the refund application is filed, there is no amendment possible to that refund application. If there is some deficiency, the only recourse available is for the officer to issue the deficiency memo, throw that claim away out from the system again, recredit whatever amount was earlier debited and ask them to make the fresh claim. But that is on account of the limitations of system. That is not what has been provided under in law as far as section 54(1) as we discussed earlier provides, and rule 90 as we discussed earlier is applied only in the context of 54(7). It does not apply in the context of 54(1). So in that context, and in fact circular also, if you see circular 125, it clearly says that the reason why I am seeking is that we cannot process that claim which is a defective claim or a deficient claim. And therefore, I would submit that again on that ground, that because of the limitations of the system, in absence of any express limitations in the law, system cannot override the express provisions of law. And therefore, on that ground also, one can clearly say that this amendment should apply to all the cases which have, to all the applications which have also been filed in the past. So that is all on refund. Second aspect, that amendment that has come is will permit you to withdraw the refund application. So a new sub-rule 5 and 6 has been inserted under rule 90, which allows the taxpayer to withdraw the application, but the withdrawal needs to happen before the provisional refund sanction order is passed or the final refund order is passed. This is but natural, because if the order has been passed, it becomes an appealable order. Certainly, you cannot withdraw the refund application once the a provisional or final refund order have been passed. You cannot withdraw the application after payment order has been passed. This is natural, because once the order is passed, then only the payment order will be passed. If you cannot withdraw it before the after the passing of the refund sanction order, certainly you cannot withdraw it after passing the payment order. You cannot withdraw it after, this is very important, you cannot withdraw it after notice is issued in form RFD 08. So as you are aware, form RFD 08 gives the power to the officer to issue a show cause notice asking the taxpayers to why the officer should not reject the claim or partially accept the claim. So once a show cause notice has been issued in form RFD 08, then you cannot withdraw it. Then the only course that you have to take is you have to reply to that show cause notice, clear away whatever objections that that officer might have, which he has expressed in that particular show cause notice, and accordingly the final refund order would get passed. So once a show cause notice has been issued, you cannot change any claim. You have to just limit yourself to the reasons that has been mentioned in the show cause notice and clarify those reasons, and accordingly the refund order would get passed. You cannot withdraw the refund application. Only withdrawal therefore is possible before issuance of show cause notice, before the passing of the provisional refund order or the sanctioned refund order. So the form that they have prescribed is form RFD 01W. Please appreciate here one more point. See, the officer may tell you that, see, you have made this defect, you have committed these errors in filing, you withdraw the claim and you file a fresh claim. If you are if the fresh claim that you are supposed to file, if it goes outside the outer limit of 2 years, please don't withdraw it. Ask the officer to issue the deficiency memo. The reason is this, that the amendment which says that the time period between date of filing and date of deficiency memo is to be excluded for calculating the 2-year limit does not apply to the cases of withdrawal. So if you suo moto withdraw it and then you make another claim, then that second claim that you make would be considered certainly as a fresh claim, because you yourself withdrew the earlier claim and now you are put forwarding a new claim, and therefore the 2-year time limit would be seen qua the date of the new claim and not qua the date of the old claim. The date of old claim can only be considered where you go on the route where you ask the officer to issue a deficiency memo and you make a rectification of the original claim, and what I would say, it's a rectified claim, and for the reasons that we discussed, in that context the original date of refund application has to be seen. for purpose of calculating the period of limitation. So please keep this in mind, because officer for not doing the work of issuing the deficiency memo may tell you to withdraw it, because now that facility is also available, but kindly don't withdraw it, especially in cases where if you file the fresh claim after withdrawal, it would get stuck on the ground of limitation. The last change that has come in the context of refund is to do with the withholding of the refund. There is basically, it's a change in the form rather than any express provisions of the law. Now, when you look at section 54, section 54(10) talks about situations where the officer has a power to either withhold the claim or to adjust the refund claim in certain situations. So section 54(10) grants that power to the officer. So take a situation where on one side there is some demand outstanding against that particular taxpayer, then on the other side there is a refund which is due, for which he has already sanctioned the refund and he has passed the refund order in form RFD 06. Now against the demand due, the taxpayer has not obtained any stay from any of the courts. The time limit to file the appeal has also expired against that particular demand. So in a way, law now assumes that that liability has been admitted by that particular taxpayer, because he has not taken recourse in terms of filing the appeal and making a pre-deposit and getting the stay. So the law assumes that now the demand is admitted. The taxpayer does not want to contest that demand, and therefore the law says that in that situation, under section 79, the officer has been granted the power that when he wants to recover any dues from the taxpayer, and if there are refund amount which is due to that particular taxpayer, he has the power to adjust that refund against that demand and accordingly recover that amount. Now in that context, already for doing that activity, because on one side you will have a refund order in RFD 06, on the other side you will have demand in DRC 01. Now an adjustment order has to be passed. Now earlier that adjustment order was part of form RFD 07, that was the refund related forms. That was a misconception, because when you want to recover, this adjustment is a part of the recovery exercise. So refund forms should not have been ideally used. The recovery forms should have been ideally used. So that amendment has been made. Now what it says, there is already form DRC 09, which allows the officer to use that form for the purpose of adjusting the refund against the due amount. So the amendment removes that adjustment part from the refund form RFD 07 for the simple reason that DRC 09 already provides for that particular action. So this is in a nutshell an amendment. If section 54(10) not only allows the officer to adjust the refund against the amount due, but it also enables the officer to withhold the refund in certain situations. So there are situations where if the person has not furnished the returns, now in that case they have the power to withhold the tax, withhold the refund amount. So 54(10) talks about situations where if the person does not furnish the return or pay the tax along with interest and applicable penalty related to that return, in that situation he is a return defaulter. And in case of return defaulter, if there is a refund due to that return defaulter, that refund can be withheld under section 54(10). Now in that context, the form has been now modified, which says that the withheld refund can be released, because once that a particular taxpayer files that particular return which was pending and pays the relevant tax, certainly that refund cannot then be withheld further, and therefore the form has been amended for RFD 07, which now also provides for the space for the purpose of releasing that withheld amount in terms of granting that payment of that particular refund back to that particular taxpayer. So that amendment, again, it's a procedural amendment, but this is something background that I felt must be understood by everyone to appreciate the amendment. So that is all on refunds. The 5 minutes I will take now for the second topic, that is MRO related services. Now, what is MRO services in the shipping industry? If you see the entire shipping industry and if you appreciate the what I'm trying to say, the shipping industry has two major verticals. One is the shipbuilding industry, where there are certain businesses who are engaged in the business of shipbuilding, and then there are certain businesses who are engaged in the business of ship repairing and maintenance. Now, ship repairing and maintenance is a huge industry worldwide. for the simple reason that this is an industry which has a consistent revenue stream. Shipbuilding does not happen with regularity because shipbuilding is a long drawn process. A lot of technological inputs are required, and it is a process which does not happen regularly. It only happens in a space of 5 to 10 years based on the demand and supply of the ships for the purpose of international trade or for the purpose of oil exploration. However, ship repairing is different because ship repairing is something which the law mandates. In fact, Indian shipping laws, the foreign shipping laws mandates that to ensure that the ship are fit for travel, one needs to ensure that they are regularly maintained, they are regularly repaired, and the ships are regularly checked. So ship repairing is a huge industry. It has a consistent revenue stream. One more interesting aspect of the ship repairing industry is that it is a labor intensive industry. Unlike the shipbuilding, which is largely a technological driven industry, ship repairing continues till today the labor centric industry. So certainly countries like India has to promote that industry. India is a fit destination for that, for the simple reason that as a ship owner, I would want my ship to be repaired in the jurisdiction or at the location to which my ship often travels, because that will save my transit time. Because if let us say my ship is traveling to JNPT, I would want my ship to be repaired near that place so that ship does not have to travel and go to some other location for repair purpose, for maintenance purpose, and then again come back to the main port to provide the transportation services. So that is why the ship owners prefer that ship maintenance and ship repairing be done near to the location which comes within the route of operation, so to save travel time, to save cost. Similar thing used to happen in the aircraft space also. For the aircraft space, in fact, in March 2020, they amended the law. They reduced the rate on the services of maintenance and repair of an aircraft from 18% to 5%. Shipping industry, they didn't do. Now they have done with notification 2 by 2021, dated 2nd June 2021. It's a prospective amendment. So the new rate of 5% applies from 2nd June 2021. They have reduced the rate from earlier 18% to the lower 5% to incentivize this industry, because as we discussed earlier, India is having all the necessary ingredients for the ship repairing industry to succeed. So tax was an hindrance. So to ensure that tax does not remain an hindrance, this amendment has been made. Another important amendment in this particular topic is in regard to the place of supply. Now, as you are all aware, under section 13, if I am doing ship repairing for a foreign vessel owner, the location of that foreign vessel owner would be outside India. But the place of supply provisions under section 13(3) says that if the services are in respect of goods which are to be made physically available by the recipient of service, the place of supply would be the place where the actual work on the goods is carried out and not the location of the recipient. So since ship repairing, if it is carried out in India for a foreign ship owner vessel, definitely as per section 13(3), the place of supply would be India, because the repairing activity is carried out in India, and therefore that amount would be liable to tax. It would not get the export benefit for the reason that the place of supply is not outside India. So that was again a big deterrent, because the foreign ship owners would then be hesitant to get that repairing services done in India if this is the cost that they have to pay. Now, so not only they reduce the rate from 18 to 5, they also say by exercising the powers under section 13(13). Now what is 13(13)? 13(13) of the IGST Act says that if there is a double taxation happening, then the government, by virtue of that provision, has a power to notify the place of supply which is different from the normal place of supply under section 13. So without amending section 13(3), because ideally such amendment where you want to change the place of supply from the location where you perform the repairing to the location of customer will run counter to section 13(13). So instead of amending section 13(13), by virtue of section instead of amending 13(3), by virtue of using the power under section 13(13), they have issued the notification, that is 3 by 2021, which is again dated 2nd June 2021, where it says that if such MRO services, maintenance repair services, are to be given to a person who is going to use these services for in the course or furtherance of his business, then the place of supply would not be the location where you carry out the repairing activity, but it would be the location of the recipient. So in our case, the foreign ship owner, since he is carried an activity in the course of furtherance of business by way of getting his ship repaired, by way of this amendment, the place of supply would not be determined now under section 13(3) as the location where the actual repairing is carried out, but now would be determined as per notification 3/21. And as per this notification, the place of supply would be the location of recipient, which is outside India. All other parameters would get satisfied in such situation to claim the export of service benefit. So this is again a big change for the shipping industry, that for foreign ship owners, virtually there is no tax by virtue of claiming the export benefit in terms of zero rating. And for the domestic ship owners, earlier from the rate of 18%, now it has been brought down to 5%, which is in line with the maintenance, repairing, and operational industry in the context of aircraft. So this is what the second amendment deals with. It's a welcome amendment. In fact, it will give a huge boost to the MRO industry related to shipping in India, because as discussed, it's a labor centric, and our country is having abundant. In fact, you will be surprised to know that the ship repairing industry has flourished in places like Dubai and Singapore, just because there is no such GST rate applicable on such repairing services. But the people who are doing this activity are mostly Indians. There is a documented report which is available on the shipping ministry website, which says that the ship repairing industry, which has flourished in Dubai and Singapore, is only because of the fact that there is no tax incidence on their transaction, because as such it's a labor intensive industry, so margins are very thin. So if there is a 18% tax burden, certainly a ship owner would not like to get that repairing done here, because anyway his ship will travel to Dubai for some transportation work. It may travel to Singapore, so it would be better for him to get the repairing done there than in India, just to save the tax. But the shipping report says that most of the people who are doing the repairing in places like Dubai and Singapore are Indians only. They are our own people who might have migrated to those countries for employment, and they are now employed by in those countries to carry out this repairing industry. So even the shipping ministry suggested that that is not what we want. We want the ship owners to get their ships repaired and maintained here itself. We have the adequate man force. We have the enough skill set. We need to do it. Last thing on this, for repairing a ship, you not only need labor, you also need materials, because certainly there are certain worn out parts that needs to be replaced. Now in that context also, customs has already issued the exemption notification way back in 2002, where the customs have granted complete exemption from the applicable custom duties whenever the import is done by such ship repair companies for the purpose of this activity. So that aspect has also been already taken care of 20 years back, when the law customs exemptions have been given. It is surprising that GST we had to wait. In fact, service tax also there was an issue. Now in GST there was an issue. Now it has been resolved. So this industry had to wait for 20 long years from the date when the customs authorities appreciated this problem and granted the exemptions to get the similar exemptions in the domestic law. But it has happened now. It's a welcome change, and certainly it will go a long way for this industry. So with that, I end my session. I would again at the end thank all the committee members, Viraj Bhai, especially for giving me this opportunity, all my co-speakers. Thank you so much.
Sir, thank you so much, sir. In your limited time, you cover entire thing very nicely. We are very thankful to you, sir, and thank you for accepting invitation on very early morning on Sunday. So we are very thankful to you. Thank you, sir. So now, without wasting much time, would like to introduce our second speaker of the today's session, Archana Jain, ma'am. She is also very famous faculty across the India. Ma'am has taken so many sessions as well, physical and now in webinar form as well from last 1 year across the country. Ma'am is a founder partner at Archana Jain and Company, and with the cross-functional experience in accounts, finance, and indirect taxes, handling internal audit, forensic audit, GST audit, AEO certification audit, custom audit, SUV orders, EDD matters, SAD refund, service tax, GST refund, DGFT related matters, and many others, also providing advisory services in relation to indirect taxes. Ma'am is qualified BCom from Sri Ram College of Commerce, DU. Also, ma'am has a great achievement as well. At present, in the past, ma'am has faculty at ICAI for GMCS, GST faculty as well at Institute and also at Federation of Indian Chambers of Commerce and Industry at NASIN as well. Ma'am is faculty for UAE VET also and speaker for different other forum, PhD chamber, Birla Institute, NIFT Delhi, many regional council, NIRC, Nikasa, South also ma'am has taken as 10 plus years of experience in indirect taxes, representing many reputed corporate houses, service tax and custom department for appeals up to sestet, has a great litigation experience at commissioners level and also at sestet level, has delivered more than 100 plus workshop seminar, also in the certification courses offered by ICAI on GST, a trainer at Post and Telegraphy Academy for GST training, GST officer at ITO to train the officers, ITR officer for GST refund and various critical issues under GST. Has a great indirect tax litigation experience as well. Service tax compounding audit and refund process audit assignment, handle various commissioner appeal and experience of appearance at various sestet as well. And always helpful to us. And whenever we call, ma'am is accepting our invitation. We are very grateful to you, ma'am. Thank you so much. And with this, we can request ma'am to take the proceeding here for today's session.
Thank you so much, Virat sir. Thank you so much, Abhay sir. And it was pleasure listening to you. It is always a pleasure listening to you. And your sessions are so enlightening that we don't want to miss the opportunity where we can be there as a participant in your session, and if we have to go out of that session. So I was listening to you, and refund has been a very dear subject to me. As you can see, most of my profile is with respect to refund only. So it was really enlightening session. So thank you so much. I'll just share my screen.
Yes, ma'am. Screen is visible. You can put up the presentation. Perfect, ma'am.
Is it my PPT appearing on the screen, sir?
Yes, ma'am. Yes, very well, ma'am. With the full screen, you can start.
Okay. Thank you so much, sir. So today my topic that has been assigned to me is the latest amendment that has been done in the recent time with respect to the 43rd GST Council meeting and the recent changes in the specific provision like revocation of the cancellation certificate or e-bill procedures, and with respect to the time of supply on the TDRs or transfer of development rights. So with this, I'll start my deliberation. So first of all, we will be discussing the revocation of cancellation. We all know that there is a statutory provision under Section 30 where the guidelines has been prescribed that how you have to revoke the cancellation. So what Section 30 says that Section 30 subsection 1 talks about subject to the such condition as may be prescribed, any registered person whose registration is cancelled by the proper officer in his own motion. That means what we see on the at times on our profile is the suo motu cancellation. They apply to such officer for revocation of cancellation of the registration in the prescribed manner. Prescribed manner means there has to be a form, and the form is REG 21 within 30 days. So this is the timeline that has been prescribed under the statutory provision of Section 30, that yes, there is a timeline of 30 days during which you have to apply for the revocation of the cancellation in case the cancellation of your registration has happened. Now further what they have said that, okay, they have added the proviso and they have said, okay, this timeline can be extended, and what are the timeline, how you have to extend it, that has been incorporated. So a proviso has been added. So it says that provided that such period on sufficient cause being shown for a reason to be recorded in writing, that means the application has to be in writing or the form has to be in writing to be extended. By whom? either by an additional commissioner or joint commissioner, and the extension timeline is 30 days. So what it means that first I have a timeline of 30 days. In case I'm not able to abide by that timeline, then again I have to apply to my jurisdiction officer, and along with that extension application in front of additional commissioner or joint commissioner, as the case may be, when the timeline that has been passed is 30 days has already been lapsed, that means from 31st day onwards up to the end of 60th day, I can again apply for an extension with an application in front of additional commissioner or a joint commissioner. Let's say again these two timelines has already been passed. I have crossed the 30 days timeline, I have crossed the 30 days extended timeline. Then it says that okay, again you have been given a further time period of 30 days where you can put an application first to your jurisdiction officer, then application in front of a commissioner for a further extension of 30 days to be awarded to you. That
I think ma'am has got disconnected. I think the presenter, C. Archana Jain ji, has gone disconnected, so she'll be trying to reconnect once again. You're not audible.
On the timeline. So first, the time period that has been prescribed under the law is 30 days. Then another extension has been provided for another 30 days, and then second extension has been provided for another 30 days. And for the first 30 days, you have to give an application to your adjudicating authority. For another next step of another set of 30 days, you have to give an application to your adjudicating authority as well as to an additional commissioner or joint commissioner. And in case both of these has already been lapsed, then again you have to give an application to your adjudicating authority as well as an application to the commissioner. So this is the provision. Now what they have said that the revocation of cancellation of registration under the State Act or other UT GST Act will also be treated as cancellation under CGST Act also. And these provisions were incorporated with notification number 92 dated 22nd December 2020. So there they have already incorporated these provisions, and that has been made applicable now. So now Rule 23. Earlier we have discussed was section 13. Now read with Rule 23, the revocation of cancellation of this registration. So now a notification number 15 of the 2021 dated 18th May 2021 has been issued, and they have amended this provision, and the rule has been amended, and whatever they have specified or they have amended by notification 94 has been incorporated in the rules itself, and the rule has been notified. The amended rule has been notified. So now Rule 23 read as The amended rule 23, sub-rule 1 read as a registered person whose registration is cancelled by a proper officer on his motion may submit an application for revocation or cancellation of registration in form of GST REG 21 to such proper officer within a period of 30 days from the date of the service of the cancellation order. That means when you have been served the cancellation order, or within such time period as extended by the additional commissioner or joint commissioner, that means additional 30 days, or commissioner, that means another set of 30 days, as the case may be, in exercise of the power provided under proviso to subsection 1 of section 30 that we have already seen. And we all know that these provisions were made applicable with effect from 1st of January 2021. But the online portal or online functionality to accept these kind of extension letter was not there. So what usually we used to do is that whenever we have to file a revocation application, we have to submit this extension letter also along with that application only, because there was no separate portal to upload this kind of documentation on the portal. So now we are expecting that now they have already incorporated, and may they have also an updated form of REG 21 also. So they will be making the amendment, and as per the amended REG 21, if you see the form on the portal, it has been incorporated that in form REG 21, under the subheading instruction for submission of application for revocation of cancellation of registration, in the first bullet point after the words date of service of the order of cancellation of registration, now they has been replaced. They have been replaced by what? Or within such time period as extended by additional commissioner or joint commissioner or commissioner, as the case may be, with respect to the power that has been given under section 30 subsection 1. So accordingly, they have incorporated the amendment in the instruction also by way of modification of the forms. Okay, so this was the first amendment. So now if we talk about this first amendment, so what it says is that, okay, now you have additional 30 and additional 30, one more set of 30 days. That means in totality, now you have 90 days to apply for the revocation of your cancellation. But yes, this again has to be, procedure has to be followed, and in case still the officer is not granting you the permission or he is not satisfied with your application, so he can have he still has the two options. Either he will accept your application or he can reject. But in case the rejection has to be there, then he has to give you an opportunity of being heard. So without that opportunity of being heard, he cannot reject your application. And in case he has given you that opportunity and still he is not satisfied, then he can reject your application for revocation. With this, will be coming up with a new set of provisions or new set of amendment that has been incorporated in Rule 138E and D by way of e-way bill 01 form and 04 form. So Rule 138E of the CGST rule, it has the restriction in furnishing of the information of Part A in the form of GST e-way bill 01, EWB 01. We also, there was a restriction in case there is a non-compliance, or in case you are not filed the return for the 2 tax periods, 2 consecutive tax periods, or there is other breach of in filing of the returns, then your e-way bill portal got blocked, and that means you were not able to issue any kind of e-way bill for both kind of supplies. That means not as a recipient also and not as a supplier also. So that was hampering that, okay, in case your supplier has a problem and he has not filed the returns. So what was happening is that neither the supplier nor the recipient, both of them were not able to file the e-way bill. So there was a restriction in the kind of business also, or whatever we can say is that, because default in filing of the return can be because of numerous reasons. That can be a bona fide reason also, that in current pandemic situation, we all know that most of the business persons are facing a lot of financial hardship. So that can be one of the reasons that yes, they are not able to find the returns. And in that scenario, in case my further supplies are also restricted because I'm not able to generate e-way bill, neither my recipient is able to generate the e-way bill. So it was hampering my business also. So now they have given a relaxation that, okay, they have amended a few words. So now what those few words that has been amended are, now in Rule 138E, the word in respect of a registered person, whether as a supplier or a recipient, it was written whether as a supplier or as a recipient, he was not able to generate an e-way bill. Now what he says that in respect of any outward movement of goods, that means only my outward supplies has to be restricted in case of my default, which are invoking the restriction on raising an e-way bill. So now that restriction will be restricted to only what? To my outward movement of goods of a registered person. So that means in case if I want to have a movement of goods as a recipient, So in that scenario, there will be no restriction at all. So what they have substituted is the word has been substituted in respect of any outward movement of goods of a registered person, that has been substituted. So now I can raise an e-way bill as a recipient of the goods. So what they have made changes, I have just reproduced the provisions that are there in the law. So nothing, notwithstanding anything contained in sub-rule 1 of Rule 138, no person, including a consignor, consignee, transporter, or e-commerce operator, or any courier agency, shall be allowed to furnish the information in Part A of the e-way bill 01 in respect of any outward movement. So only outward movements have been restricted whenever there is a default on my end with respect to filing of the tax return that has been enumerated in point A. Then your like GST CMP 08 for 2 consecutive quarters, or my returns for 2 tax periods. In case there is a default, then this kind of restriction will be applicable only in case of any movement, outward movement of the supply of goods. So these are the provisions. So now this restriction is applicable only in respect of any outward movement of goods of a registered person. In other words, this restriction is not applicable on recipient. E-way bill 4, again they have made an amendment that yes, now any kind of delay in case your vehicle has been detained, so any kind of delay beyond 30 minutes can be uploaded. The reason for the same can be uploaded by the transporter also on the common portal. And we all know this half an hour delay is nothing, because at times the vehicles have been detained for more than hours, 5 hours, 6 hours, and they are not even able to understand the reason for those delay. And in the meanwhile, your e-way bill, validation of your e-way bill is expiring, or it already get expired. So in that case, again, you are facing multiple challenges and multiple non-compliance of the provision. So they have given this provision that okay, now the transporter can also upload the reason, and he can upload that yes, the vehicle has been detained for more than 30 minutes. I doubt how this functionality will be working and how well we will be using this functionality, but yes, they have made the provision in Rule 138, sub-rule B. This is the amendment history which I have just captured for the sake of your future reference, the way this 138 has been incorporated or it has been amended from time to time, that you can always refer as per your convenience. Now, one more important clarification, I should say. It was not any kind of amendment, it was just a mere clarification, because these kind of provisions were already there in existence without this notification also. This was my little understanding. So the next topic which I'm going to discuss is Joint Development Agreement, or JDA, where the landowners share what will be the implication on the ITC and the time of supply of that ITC, or the time of supply for the payment of taxes. So in an area sharing development agreement, landowner transfer the development right to the of their own land to the developer. So this is one transaction. Land developer or the developer of that project develops and constructs superstructure inter area for the landowner on the landowner's share of the land. That means that is a complete share of land. I may have a share on that land or an undivided share on the land, but that will be supplied to myself. What I'm doing is there are two transactions. One is the transaction where the landowner or who owns the land, he is giving the development right to the developer. And the second limb of transaction is where the developer will be giving the construction services to that portion that has been owned by the landowner of the construction services on that particular piece of land. So GST is chargeable on such construction services provided by the developer to the landowner, because I'm providing a construction services, so I will be charging GST to them. So what was happening was that, okay, again by the notification that was issued in 2009. Yes, sir.
Sorry to interrupt, ma'am. We have a limited time, so you have a last 5 minutes, ma'am.
Okay. Yes, sir. Thank you, sir.
Thank you.
Okay, so time of supply, that will be until now what GST was providing this, that land developer is liable to pay GST on the construction services provided to the landowner in lieu of this development right at the time of issuance of completion certificate or first occupation certificate, whichever is earlier. So by virtue of this provision, what was happening was that when land owner used to further sell that allotted areas or flats to the intended buyer, before the issuance of OC or CC, he is required to raise invoice and charge GST as when payment is due from the buyer. But in case it is after that point of time or after completion certificate or OC certificate, then that whole amount of GST that was charged by the developer was going to be a block credit for him or a block kind of cost to him. So accumulation of ITC was there since the landowner has to pay tax, and as and when the payment is due from its buyer, he has to pay tax in cash, because there was a provision under 3/19 that whatever 1% or 5% that has to be paid in cash only if the time of supply arises, that is payment due from the buyer prior to CC. If developer raise invoice and charge GST at the time of CC or first occupation, it will be again resulting in an accumulation of ITC in the hands of landowner. So now what they have done is, with notification, because this provision was already there in 3/19, and we used to suggest that there is no bar that you cannot pay your tax liability in advance or in advance of your time of supply. Only thing is that you have to inform your jurisdiction officer or your officers that, okay, we are paying this tax because of this provision, otherwise it will be a blockage of credit only. So it is a mere clarification as per my view. It is just to remove that technical ambiguity, so that the literal interpretation of notification 6/19 that was issued in March 2019 should not be done. And now this just last link of my presentation is the utilization of ITC. Again, there has been a clarification issue. Now, if we talk about entry number 3, with in notification number 11/2017, there is a condition with respect to the resident apartment that tax has to be paid through cash only. So considering this technical language of the notification, someone may literally interpret that although landowner may have the available credit in his hand, but he will not be able to utilize the same because there is a provision that it has to be paid in cash only. So now again they have clarified this thing with notification number 2/21 by virtue of adding these words that landowner or promoter shall be eligible to utilize the credit of tax charged to him by developer promoter for payment of tax on apartments supplied by the landowner promoter in such project. So that means now I am eligible to use that amount of credit, and it will be equal to my cash dischargement that was there in the notification. So the literal interpretation of that notification will be done away with this kind of amendment. So these were few amendments that was required to be discussed today. And yes, with this, I'll end up my deliberation. Thank you so much once again to the organizers, Virat sir, Kashish sir, for giving me this wonderful opportunity to be here with you all and to share these new amendments with you all.
Thank you so much, ma'am, for wonderful presentation. Many participants are asking for your presentation as well, and they are also, appreciating the presentation. We are very
Thank you
sorry
so
that due
much.
to limited time we have to stop you in between, and we have to inform
It's
you.
perfectly fine.
But
So
we
we
will
have
have
to
a definitely
respect time.
another session with you. Thank you, ma'am.
Okay,
Thank
thank
you
you
so
so
much.
much, sir. Thank you. Thank you.
So now we would like to invite our today's third speaker, CA Kashish Gupta ji. He is a more than 9+ years of experience in providing tax and legal services, and he is a founding and managing partner at Fox Legal. He is founded in his firm in 2021 with its head office in Delhi and branch office and district and session court at Chandigarh for providing services in the field of indirect taxes and civil dispute. He has also has been nominated as co-opted member of Indirect Tax Committee at NIRC of ICAI, and before this has been head of Indirect Tax Litigation Division in one of the top 10 CA firm in India. He possesses extensive knowledge in stock command over the subject, has successfully handled and represented various matters on indirect taxes in GST, VAT, service tax, custom, excise, has worked for multiple industry segments including Indian and foreign multinational PSU and Fortune 500 companies. Kashish was privileged to become one of the India's youngest taxation author in 2017 when his book Commentary on Revised Model of GST Law was published by Bharat Law House Private Limited. He has been offered 3 editions of aforesaid book till date. In 2019, he has authored 2 specialized books on GST. One of the GST Annual Return and Audit, and second is GST Tracker, containing section-wise rule-wise list of all notification, circular order, removal of difficulty order, and a synopsis of judgment released till date of released book. Has a great work experience and training experience as well at multiple forums, including a PSU and a corporate, and author of multiple books, and has a great academic and schooling and college experience as well, and has completed his LLB in 2020. So with this small introduction, we welcome you, Kashish Bhai, and would like to request to take the proceeding ahead, sir.
Thank you, Viragji. And it is always wonderful work to be on your platform to speak on the various intricacies of the GST law and to guide the attendees of the Connect Easy platform with the best of the knowledge which we possess. And today's session has been wonderfully convened so far. And I would say on a very lighter note that whenever we have more than one speaker, the very first two speakers always enjoy the liberty of having a plenty of time and to speak to the extent they wish to speak. And it's the third speaker, which I am today, whose job is to finish on time, leaving the ample time for the fourth speaker. And so is my role today. It doesn't matter that at what time I am starting, but I have to finish, leaving a substantial time for Rajeev sir so that he can also complete his deliberation. So with this, I would like to start my presentation. And the topics which have been assigned to me is that what we all were speaking from from a very long time, that why the payment of interest is to be made on the net tax amount. What are the reasons behind this? And then I would say the most discussed topic for this time, or the most litigated topic which is going to become in the times to come, that how the extension of the period announced as a result of COVID-19 pandemic is going to play a pivotal role in extending the dates for various actions under the law, whether it applies to only actions which are in the nature of legal, or it may apply also on the proceedings which are in the quasi-judicial proceedings, or it may also apply to the other actions like filing of refund applications, etc. With this, let us discuss the very first aspect of payment of interest on delayed payment of tax. Friends, as we all know, interest is payable on the amount which is being paid from the electronic cash ledger, and the proviso has been made retrospectively operational now. But without delving deeper into the proviso, I would like to highlight that section 51, which is on the screen as of now, it says that every person who is liable to pay tax. Therefore, the food for thought which I would like to give to my audience is that the word here is tax. It is not output tax. Had the intention of the legislature been to levy interest on the gross amount of tax, that is the output tax, they could have used the word output tax instead of using the word tax. And to my mind, the word tax here would mean the net tax, meaning thereby the tax which is being paid after utilizing the benefit of electronic credit ledger, or if there is any payment which is to be paid in cash, then it means that the payment which is being made from the cash ledger. Henceforth, a view can be taken that from the originally drafted language of the section 50 subsection 1, the interest was always payable on the net tax. Now, just as I said, it is a food for the thought. You must pay concentration on delving deeper into this word, whether it is a tax or it is an output tax. Now, coming to the proviso, which is of restrictive nature. I am saying restrictive nature. Why? Because it says that the interest can be paid only on the liability which is paid from the cash ledger, but it excludes the two circumstances. First circumstance is that if the supplies are made during a tax period and they are not reported in the same tax period. For example, there is a supply for the month of April 2021. If this is reported in the GSTR 1 3B, it uses the word return, so I would say 3B of April 2021, then this proviso will apply. But if is furnished in 3B for any other period later than April 2021, then this proviso will not apply. In that case, it asks for the payment of interest on output tax without allowing the benefit of electronic credit ledger. And second circumstance is this, which I am going to highlight. Second circumstance is that if the payment is being made after initiation of the proceedings under section 73 or 74, meaning thereby if there has been any notice which has been issued for the conduct of audit, and in pursuance of that notice you get an audit objection memo, wherein the objection is in the nature that you have not paid your self-assessed tax liability, or you can say you have not filed your returns, and in pursuance of that action you are going to file your return, then in that case this proviso benefit is not applicable. Then what is left with you to argue in that case? In that case, what is the only remedy? The only remedy which is left with you to argue is on this word, tax. That from the main provision, the reading of the main provision itself suggests that the interest shall be paid on the tax. That is the net tax and not the output tax. Now, these are the journey of notifying this proviso. The journey started from 31st GST Council meeting, wherein the representation was made that interest should be paid on the net tax liability, and as a result of those representations, these matters were put up, wherein they said that if you read the provisions of law, this is another contention. The contention number one, which I have told you, is the implications of the word tax. The contention number two is that if you read the law, there is a concept of valid return, invalid return. Valid return is a return wherein the payment of taxes are made in full, whereas invalid return is a return wherein the payment of taxes are not made in full. Meaning thereby, as per the original scheme of law, there are provisions which says that tax can be paid without, in part. In a return, the tax can be paid in part. But when we navigate the GST network portal, we notice that such a functionality has not been made operational, which has a consequential effect in the nature that a registered person cannot self-assess his input tax credit on time, because of the reason that return can be filed only and only after making full payment of taxes, and in a case where there is an electronic credit ledger availment in the return and there is no cash to pay output tax liability, for want of which the return filing has been delayed. In that circumstance, the availment of ITC has also been delayed. So punishing the taxpayer by way of disallowing his input tax credit for the purpose of paying interest is not proper in law. Therefore, the representation was made in 31st GST Council meeting, wherein these contentions were put forth that permits the part payment of tax, but no such facility is there on the portal. Therefore, in the 31st GST Council meeting, they approved this proposal, and I don't know the reason why, but this proposal was made with this caveat only, that where the return has been filed, wherein the invoices for the same tax period have been furnished only, in that case the benefit shall be allowed. So accordingly, it has been so made. And in Finance Bill 2019, this proviso was introduced. After the introduction of this proviso, another round of arguments were there in the market, wherein the issue of prospective operation or retrospective operation of the proviso came into the discussion. In that time, there was judgment of Madras High Court in case of Refex Industries, wherein it was upheld by the court that this proviso shall have a retrospective operation. But still, there was a legal dispute. Certain adjudicating authorities were taking a view that this proviso will be prospective in operation. Therefore, interest is required to be paid by 31st of August 2020. When the matter was discussed in the 39th GST Council meeting, it was decided, and administratively decided, that with effect from 14th day of March 2020, we won't ask assessors, we won't issue any notices to the assessors asking them to pay interest on the gross tax liability. Therefore, you may notice that after 14th day of March 2020, no such kind of notices were issued. But the notices which were issued up to 14th day of March 2020, by way of another administrative order dated 18th of September 2020, it was asked to be put in the call book. They said as administrative instruction were issued, wherein it was mentioned that all the show cause notices which have been issued shall be kept in the call book. And taking a note of this administrative instruction, Honorable Bombay High Court in case of Royal Chains have also disposed of a writ petition wherein the point of payment of interest on net tax liability or gross tax liability was raised, and it was decided that in light of this administrative instruction, till the time a specific retrospective amendment is made in the law, the show cause notice is kept in poll book, and once that retrospective amendment would be notified, the show cause notices would be adjudicated in light of the law prevailing in India. Accordingly, the writs were disposed, and in Finance Bill 2021, again the same proviso was introduced, which has been notified by notification number 16/2021 on 1st day of June 2021, and a retrospective amendment has been made specifically. Therefore, the net impact of this retrospective amendment is to dispose of the show cause notices which were issued to the taxpayers so that they can now get them disposed of. Now, a corresponding question arises as a result of these things is that if this retrospective amendment has been made now, that is on 1st day of June 2021, if any assessee has paid interest on the gross tax liability, can he claim refund thereof considering the relevant date as 1st day of June 2021? To my mind, this case is clearly, very clearly settled by Honorable Supreme Court in case of Mafatlal Industries, wherein they say that you have to keep your claim alive in order to be eligible to claim the refund. Therefore, the issue of payment of interest on net tax liability was prevalent since last 2 years, and it cannot be said that the relevant date shall start from today. It shall always start from the date of payment of interest. And if your claim is pending for the refund or is pending in any appeal, you can apply the benefit of this retrospective amendment and claim the refund. But you cannot create a fresh cause of action now considering the relevant date as 1st day of June 2021 to apply refund within a further period of 2 years. You cannot do this. I hope I am clear. Now, another part which is a precursor to the session of Rajeev sir, wherein he is also going to discuss the various due dates, but certain due dates have been allocated on my part also, which I am discussing. The very first due date is the date of grant of registration. The date of grant of registration, including the date of replying to the deficiency memos issued by the proper officer asking for the information, has been extended till 15th day of July. Therefore, if any assessee has applied for the registration within this period, he can get the registration by 15th day of July 2021, wherein these 4 actions are concerned. I am facing this practical challenge at one of my clients who is a very big corporate, wherein the registrations are being applied and they need registrations on the urgent basis. But on account of certain lockdowns being imposed by the various state governments, it was practically not possible to get the registrations. Therefore, things are getting tough also for the assessees on a practical side due to this delay. You can yourself imagine that a delay of 2 months in grant of registration really matters a lot in terms of the claim of input tax credit, in terms of the various other compliances under the law, wherein the tax invoice is to be issued as a registered person. Now, with the gap of this 2 months, another exercise has to be carried out by the taxpayers after receipt of registration in the nature of issuance of revised invoices, in the nature of availing the input tax credit by taking the opening stock on record, which is 2 months prior to the date of grant of registration. A lot of procedural issues will come to their way, which are very well addressed by section 31 of the CGST Act. Now, coming to the provisions related to the refunds. This is very important. They have said that in a case where a show cause notice is issued, inform RFD 08. So the very important point is that show cause notice should have been issued, and another important point is that the 60-day time period must fall within this period. If these 2 conditions are satisfied, then they said the time limit to make the compliance to issue the refund order is 15 days from the reply of this notice, which is in form GST RFD 09, 15 days therefore, or 30th day of June 2021, whichever is later. For example, just consider a situation that if a notice is issued, for example, on any date between the period, and the reply is submitted on 30th of June, that is the extended date, then in that case, the due date to pass the refund order would be 15th day of July. But if the, for example, if the reply is submitted on 9th of June, then 15 days expire on 24th of June. In that case, the date of issuing the refund order would be 30th of June 2021. So this is the law related to the refunds. Now, very unique part notable as a result of these changes is that whether as a result of these extensions in the time, whether as a result of these extensions in the time, the liability of the department to pay interest also get extended under section 56. Ideally, it should. But if I read the law technically, section 56 independently uses the expression 60 days from the date of receipt of application under section 54. There is no amendment which has been made under that section. Therefore, you can always claim the interest from the expiry of 60 days irrespective of the fact that the order has been passed by the extended date. You can try this way also. Another important thing is that consider a situation that a show cause notice is issued on 22nd of May. You replied on 28th of May, and the order in original is passed on 31st of May. Now, this is a rejection order. You file the appeal, you won the matter, and you get the refund. Now, the question arises in this case, can you argue that interest shall be paid from the expiry of 60 days, or the interest would be paid? First situation is that from the expiry of 60 days, which expires on 1st of June, or from 30th of June, from which date the interest should be given. In that case, you can very strongly argue that interest should be given from the expiry of 60 days, that is on 1st of June, because of the reason that it is the officer who has opted to pass the order before the due date, which is allowed to him to pass the refund, and in that way he can he is always subject to the application to the provisions of section 54. Now coming to another general extension, that if any matter which falls due for compliance between these dates, the due date has been extended by to 30th of June. Therefore, a question arises, what kind of matters are covered by this timeline? This timeline covers all the actions which are given in the GST law, except the actions mentioned from point A to O here, which are in the nature of time of supply, lapse of composition scheme, procedure for registration, tax invoice issuance, filing of GSTR1, late fees, payment of interest, power of arrest, and certain other furnishing of returns, which is issuance of e-way bill. These all points are not covered here. All other compliances are covered, which include the filing of return, which include the issue of notice, or you can say a show cause notice, which include issue of order in original, etc. Now coming to the interplay of this extension notification with the extension given by the Honorable Supreme Court. The Honorable Supreme Court has given an extension, an ad hoc extension with effect from 15th day of March 2020. Now, if you see the objective why this order has been passed, this order has been passed with a very predetermined, with a very clear objective that the litigants across the country shall not face trouble in filing petitions, applications, suits, appeals, or all other proceedings. Therefore, this ad hoc extension was given. But in the end, in the last part of this order, they mentioned that we are exercising this power under Article 142, read with Article 141 of the Constitution of India, and declare that this order is binding over within the meaning of Article 141 on all courts and tribunals and authorities. Now, there are certain school of thoughts which are interpreting this word authorities in two ways. One says that this authority is restricted only for the purposes of recovery, that my time limit to file the appeal has been extended. Therefore, on the expiry of 3 months to file the appeal, the authority shall not initiate the recovery action because the limitation period has not yet expired. Another school of thought says that this authority means that all functions under the GST law, including the filing of refund application, gets extended. But I consider that this is a matter of argument, and you can argue in any manner, and this is the time will tell that what kind of interpretation is coming out of this order. This order was finally settled in March 2021, wherein they said that a time limit of 90 days shall be permitted with effect from 15th day of March 2021. And if the balance period as on 15th day of March 2020 is more than 90 days, then the higher period will be applicable to ensure all the compliances. And in this order, they also said that if any point is due for consideration under arbitration and conciliation proceedings, commercial courts, negotiable instrument, then that will also stand extended. Now, just to say, under the Commercial Courts Act, there is a concept of pre-mediation proceedings, wherein it is said that if I have to file a money suit against you, then prior to filing of that suit, it is mandatory to issue a notice for having a pre-mediation proceeding, so that instead of going to the court of law, we can settle our claims here. In the Negotiable Instrument Act, if the check is bounced, then I have to give a 30-day notice to the accused, giving him a time of 15 days to make the payment. And in case he fails to make the payment, then I can file the complaint before the judicial magistrate. Therefore, it appears to my mind that the only proceedings which are inextricably linked with the institution of appeal, institution of litigation, are also extended, because if once we do not do these kind of work, then how can the period can be extended? Therefore, why I am linking this in a way, because they have mentioned the word any other law, which also include the GST law. Therefore, how to apply this order on the GST law? Let us discuss. So as I said, the order of the Honorable Supreme Court applies to the courts and tribunals. If you can see, the word used is court or tribunals. Here, the court or tribunals. So how this order applies? Let us understand the meaning of the term court or tribunal. If I read the Civil Procedure Code, there are following stages of the disputes. One is civil judge, then additional district judge, then High Court, then Supreme Court. If it comes to the Criminal Procedure Code, then we have Judicial Magistrate, Session Court, High Court, Supreme Court. If I come to indirect taxes, we have Assistant Commissioner, Deputy Commissioner, Joint Commissioner or Commissioner as the adjudicating authority. Then we have Commissioner Appeals, then we have State, then we have High Court, and then we have Supreme Court. Now, the court means a place where the judicial proceedings are conducted, where the evidence can be taken on the oath. So all these authorities are the judicial authorities, because here the evidences are taken on oath. Judicial functions are discharged. Since the order has specifically used the term tribunal, I will also cover it here. Now the question arises, what about these two stages? Are these also covered by the Supreme Court order? That is the matter of discussion. Therefore, it appears to me that the first two orders did not cover these stages. However, with the second order, wherein they used the term any other law, wherein the proceedings inextricably linked with the institution of appeals was also sought to be covered, I will say that filing of appeal was also covered from 15th day of March 2020. Therefore, if any appeal is to be filed, you can always file it. But how this order will apply on the issuance of show cause notice or on the adjudication of show cause notices? For these matters, you already have a special notification under the special law, that is GST law, in the name of 35 by 2020, 14 by 2021, and now 14 by 2021 and 24 by 2021. So you can always say that these proceedings are covered by that order, and if any authority has not issued the show cause notice on time, then you can always take a call that it has become barred by time and you cannot take the benefit of the Supreme Court order. Also, on 27th day of April, the third order on this matter, the word quasi-judicial proceedings was also covered. So quasi-judicial proceeding is a proceeding which is other than judicial proceeding, wherein the evidences are not taken on oath, and that proceeding, to my mind, will cover this stage of adjudication of show cause notice, because issuance of show cause notice is only and only a administrative function, not a quasi-judicial function. Therefore, to my mind, the only point which left out of consideration of the Honorable Supreme Court order is the issuance of show cause notice. And to my mind, whatever be the period which apply on the adjudication of show cause notice, be it from 15th day of March 2020 or from 27th day of April 2021, the issuance of show cause notice was never covered within the ambit of the Supreme Court order, and the benefit shall not be made applicable thereon. Also, there are certain clashes between the time limits given by the Supreme Court and between the time extensions notified by the, but I am completing in 1 minute, by the GST department. So in 43rd GST Council meeting, it has been said, wherever there are clashes, the extension by the Supreme Court will prevail. For example, the special law notified that with effect from 20th day of March 2020 to 30th day of August 2020, the period will stand excluded, which includes the period for filing commissioner appeal also. Whereas the Honorable Supreme Court extended the time with effect from 15th day of March. Hence, in case of this clash, the Supreme Court order will prevail, and if any appeal falls due between the period of 15th to 20th, it can always be argued that it is not time barred as on date. So I hope I have been able to do sufficient justice with the topic. Here is my profile if you wish to contact me, and in case you wish to download this presentation, then you can navigate to our website through the page media and updates, webinar, seminar. In that section, this PPT would get uploaded in either today or by tomorrow evening. You may download from there also. So with this, I end my session, and I thank Virag Shah, ConnectEasy, and Webtel for jointly organizing this session and enriching the audience with such a wonderful analysis by the various experts in the field, and getting us also enriched on the matter. With this, I complete my session, and I hand it over to Virag sir for further deliberation. Thank you.
Thank you so much, Kashish Bhai, for your wonderful deliberation in a limited time on a Sunday morning. We are very thankful to you, sir. You accepted our invitation and delivered the session with all the attendees. We are proud of all the attendees who will join in the Sunday morning to take the knowledge. And now we are welcoming our today's final faculty. Last but not the least, we can say, as Rajeev Khandelwal sir is an alumni of Sriram College of Commerce. Sir is a fellow chartered accountant, has completed DISA from ICAI and over more than 25 plus years of experience. So thank you for sir, first of all, for accepting our invitation and addressing here, and also we are thankful for becoming our technology partner as well. So thank you, sir. Sir is a faculty at Indirect Tax Committee for ICAI. Sir has contributed to e-learning module at ICAI, conferred an award by NIRC for contribution as faculty in various seminars. Sir is ex-convener of Information Technology Study Group at NIRC of ICAI. Sir has co-authored a book of Chartered Accountant E-Practice Manual. Sir is regularly contributing article on GST, Electronic Scheme of Government Information System Audit, and in the Journal of Institute, and also NIRC newsletter and other newspaper and journals. And also, sir is a regular speaker on GST e-filing scheme and other e-initiative of government and technology related subject on various platforms of CA Institute, CS Institute, Cost Accountant Institute, Gnan Darshan channel, and many other forums as well. So with this, we are welcoming you, sir, and we can, if you would like to share the presentation, you can share screen as well, sir.
Thank you, Virag Bhai, and all these wonderful deliberations by my co-speakers. I would like and thank you, the audience also. Without wasting much time, I'll start the deliberations, and I think we are already overshot the time, so I'll try to keep it short. Is my screen visible?
Yes, sir.
It is
Perfect, sir.
visible? Okay.
Perfect, sir.
So I think already many technical and legal issues have been talked about. I'll just confine myself to the final. After considering all these things, understanding all these things, we need to know when the due date is there and what is the maximum late fee, etc. that is to be paid. So we'll be just talking about that. And it's a Sunday. I don't want you to put too much into your heads now. And I think you might be having other commitments also. So what are the extension of due dates and various reliefs in late fee, interest, etc. that we'll see. As you're aware that the 43rd GST Council meeting was held on the 28th of May, and thereafter various notifications have been issued. But let us understand that there is no waiver for returns which have already been filed. So if you have already filed the return and late fees has been paid by you, interest has been paid by you, I think there is no relief in that, particularly the late fee. And I think even interest, the other speakers might like to add something to that. Then let us see what the basic changes have been made or how the late fee has been capped. In the case of the prior period, in fact, for the current or the future period, we are talking about GSTR 1, that is the return period May 2021 onwards. If the turnover in the preceding year was nil, then maximum late fee is 500. If it is between, it is up to 1.50 crores, then the late fees maximum is 2,000. If it is between 1.5 crore to 5 crore, then it is 5,000. And above 5 crores, it is 10,000. So obviously, they've linked it to the turnover so that smaller ones get more relief. And when we talk about GSTR 3B, first we'll talk about the period, prior period, that is July 2017 to April 2021. If there is nil liability, then the maximum late fee per return is 500 rupees. And if there is some liability, irrespective of the amount of GST payable, then the amount maximum late fee that is payable per return is 1,000 rupees. But obviously, you have to ensure that this filing is done till 31st of August. That is the period 1st June to 31st of August. If you do the filing during this period, then the relief is there. Otherwise, you won't get this relief, and the normal GST late fee and interest, etc., shall be applicable. For subsequent periods from May 2021 onwards, if the liability is nil, the maximum late fee still remains 500. And for turnover up to 1.5 crores, it is 2,000 rupees. From 1.5 crores to 5 crores, it is 5,000 rupees. And above 5 crores, it is 10,000 rupees. So this is the maximum fees that is to be paid now. Earlier, there was no capping and a lot of amount had to be paid. And that is why many cases people were not filing. I think this should really help the professionals and the taxpayers to file their returns now, all the pending returns particularly. Regarding late fee, obviously, if there is nil tax liability, maximum late fee is 500 rupees only per return. And if the tax payable is there, then 2,000 rupees is the maximum late fee payable. GSTR 7, tax deductors, late fee per return per day is rupees 50. Maximum late fee per return is 2,000 rupees. And I think it's been already talked about that if the due dates for various activities fall between 15th of April to 29th of June, and the due date has been extended to 30th of June. And obviously, it's not applicable to all these, whether it is registration, furnishing of returns, levy of late fee, power to arrest, furnishing of returns, etc., 345, etc. All these things. Other than these things, whatever things are there, like general returns, like 7, 8, 9, etc. In those cases, this the general extension of 30th of June will apply. We'll just now see the due dates also. Also, another important change that is there is that the Rule 36 will not apply in case of returns for the April 2021, May 2021. That has been postponed to June 2021. So that's 5% extra ITC from GSTR 2A or 2B that you take. That means that whatever is appearing that you can in your books, you can take the benefit in April 2021 return, May 2021 return, but cumulatively for June 2021 return, you'll have to do this calculation of 5% extra ITC in this return of June 2021, which will be filed in July. In GSTR1, also you are aware of these due dates extension. For April and May, the due dates are 11th of the subsequent month. That has been extended to 26th of May for April and 26th of June for May. And next, for IFF, that is invoice furnishing facility for QRMP suppliers, the due dates have again been extended to 28th, so it is 13th of the subsequent month. So for April 2021, it was to be filed by 28th of May, and for May 2021, it has to be filed by 28th of June. GSTR 4, financial year 2020-21, the due date was 30th of April, which has been extended till now to 31st of July. In tax payable by composition persons for March 2021 quarter, the due date was 18th of April. So till 3rd of May, if you had made the payment, no interest will be payable. And from 4th of May to 17th of June, if you had made the payment, then 9% interest was applicable. And from 18th of June, 18% interest is applicable. ITC 04, January to March 2021, the due date was 25th of April. That has been extended to 30th of June. And interest for late filing of GSTR 3B, if the turnover is above 5 crores, the due date for March was 20th of April. Till 5th of May, there is no late fee. And from 21st of April to 5th of May, 9% interest. And beyond this date, 18% interest. I think these dates are already over, so we can talk about May only. So for May, 20th of June was the due date. There will be no late fee till 5th of July. And from 21st of June to 5th of July, interest at the rate of 9% will be applicable. And thereafter, from 6th of July, interest at the rate of 18% will be applicable. If we are talking about turnover up to 5 crores for monthly filers, here the dates for April are also still pending, so we can talk about that. So the due date was 20th of May, and no late fee till 4th of July. And if you do the filing from 21st of May to 4th of June, then no interest will be payable. And if you make payment and file GSTR 3B from 5th of June to 4th of July, 9% interest is to be paid, and thereafter at the rate of 18%. Similarly, for May 2021, the due date was 20th of June. There's no late fee to till 20th of July, and no interest also from 21st of June to 5th of July, and interest at the rate of 9% from 6th July to 20th of July, and thereafter at the rate of 18%. And if we talk about QRMP filers, in that case, again the due dates they're quite near. In fact, it is there for March 2021 also. So for it was the due date was 22nd of April. No late fee till 21st of June. We still have time for that. No interest till 7th of May, and interest at the rate of 9% from 8th of May to 21st of June, and thereafter from 22nd of June at the rate of 18%. This was the category 1 states. Category 2 states, similar due dates, difference of 2 days only. Then for April 2021, the due date was 25th of May. This is just filing the PMT 06 challan because return is not to be filed for April and May. So no late fee is applicable. So for the month of April, if you do the filing from till 9th of June, there is no late fee and there is no interest also payable. From 10th of June to 9th of July, interest at the rate of 9% is payable, and interest at the rate of 18% is payable thereafter. And for May 2021, till 9th of July, no late fee, no interest. And from 10th of July to 24th of July, 9% interest will be payable, and thereafter at the rate of 18%. So if we see the June calendar, these are the obligations that we have to fulfill. In fact, today is also a due date of people who are having turnover above 5 crores in the earlier year. So for making the payment of tax and filing GSTR 3B for the month of May, it is the due date today. And if they make payment after this date, then they have to pay interest at the rate of 9%. And but people who are having turnover up to 5 crores monthly filers, they can do the filing till 5th of July without any interest. So these you can see are the due dates of 3B, PMT 06, 25th of June for the month of May. Then GSTR 1 I've already told you, and IFF I've also told you. Then 30th of June, again, various obligations are there. The filing of application for revocation of cancellation. The due date of filing of such application is between 15th of April to 29th of June. ITC 04, we've already talked about, 30th June is the due date. And 5 and 5A for the months of March, April and May, 30th of June is the due date. GSTR 6 for the month of April and May is the due date. And GSTR 7, monthly return by tax deductors for the month of April and May, 30th of June is the due date. Similarly for GSTR 8 also. July calendar, if you see, various things are there. From the 1st of July, as you might be aware, dynamic QR code is a must on B2B invoices for turnover above 500 crores. Penalty to be levied from 1st of December 2020 if you are not ready by 1st July 2021. This deadline has been extended several times, but now again it is staring us in the face. Then other than that, I've already told you 4th July and 5th July, these are the due dates for GSTR 3P for turnover up to 5 crores without late fee but interest at the rate of 9%. And 5th July for payment of tax for May for turnover up to 5 crores without late fee and interest. Then MT06, 9 July, you can pay for the month of April, interest at the rate of 9%, or for the month of May under the QMP scheme without any interest. And similarly, these other liabilities are there, like payment of tax. Again, for the April, May, June quarter for composition taxpayers, the due date is 18th of July. It has not been extended as of now. Then other liabilities, again, 3B different dates for when interest will be applicable, when it will not. I think we need to take note of all these dates because so that whenever there is delay, we are aware, and we should try and pay in time so that the client does not have to pay more interest. In PMT 06, 24 July is the due date for the month of May with interest at the rate of 9%, and obviously 31st July is the due date for GSTR 4 for 2021. So we have we make websites for chartered accountants, and this is a sample site cavirtual.in, wherein various facilities are available. A lot of data is available regarding ad tools, etc., various calculators, various other utilities, etc. And also we provide these due dates. We regularly update these due dates. These calendars are there, and you yourself or your clients can also add it to your Google Calendar so that all these dates are updated there also. So this facility is there on the website cavirtual.in, and you yourself can also get a similar website made for yourselves. Other than that, that was about the due dates. Other than that, some reduction in GST rates has also been done for COVID-19 relief measures. Briefly, we can see that the GST rate has been reduced to 5% up to 30th of September as of now for medical grade oxygen, COVID-19 testing kits, hand sanitizers, pulse oximeters, oxygen concentrators or generators. These are the general things that we all are aware because of all this pandemic at this time, and we are aware about these things. That other equipments are also there which we might not be much aware of, or ventilators, temperature check equipments, marker kits, etc., or gas electric other furnaces for crematorium, IMAP machines, IPAP machines, etc. So rate has been reduced to 5% up to 30th of September. Then various COVID medicines, again, you might have heard the names. Remdesivir, we've heard a lot. So 5% rate has been reduced. Then heparin, which is anticoagulant, again, rate has been reduced to 5%. And for tocilizumab rate has been reduced to 0%, and amphotericin B, which is for the black fungus, the rate has been reduced to 0% till 30th of September. So that was all I wanted to share with you in the limited time. Thank you so much.
Thank you, sir. Thank you so much for your wonderful deliberation. It's a great session, sir. There are many comments from participants in the question tab, as well as in the my personal WhatsApp message as well. We are very thankful to you, sir. So, friends, participants would like to announce that we have a mega webinar series for almost for a 51 hours mega webinar series. We can tell it's basically for around 25 days. Every day 2 hours on different aspect of GST that we are going to launch soon. It will be start from 5th of July. So it will be run for 5th August up to 5th August. That is one of the mega series we are launching. So we'll share all the details soon with you all on your mail ID as well, and you can check all the details there as well. And also we'll everything will announce including the fee structure and all that in the with the speaker and the course structure entire design soon in the mail and in our all the social media handle. So with this we can our yes, Rajiv sir or Shubham bhai, anything is pending for today's session, sir?
So it's complete from my side. Shubham, you want to add anything?
No, sir. Just would like to thank Virajji for their platform, Connectees, and I would like to request all the participants to kindly enroll for the upcoming series. We again will collaborate with the Connect Easy, and Rajeev sir and speakers from Webtel will deliberate their experience with the technology along with the legal aspect. So it might be very helpful for all the participants. And just this, Virajji, and let us hope that we
Yes.
continue doing such events for the benefit
Yeah.
of professionals.
Yes, thank you, Shubham bhai, for this wonderful opportunity. Friends, with the expert speaker from the all the GST professional across the country will invite, and it will have a very fruitful discussion over the month in the 51-hour webinar series. So kindly enroll that, and with this we can conclude our today's webinar. Before that, just want to play one video, a small video what we have done in last 1 year, and what our guest, our chief guest or council member has to say about us in the last 1 year. Just smaller video, and after that we can conclude today's session.
Thank you, Raj sir. Thank you, Rajeev sir.